Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our 1 month recap for M1 Finance, individual account, and the Roth IRA. So we're going to be covering the total equity between both portfolios, the dividends that were paid out, what stocks paid out those dividends, where those dividends were reinvested into, and whether the portfolio moved up or down, measure the total return for the month of February 2019. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. If you do enjoy the video, find it helpful, hit the thumbs up. And if you have any comments, questions going over today's video, the stock market, personal finance, or drop a comment. What was your return for February? I always appreciate all your guys' comments, as well as the thumbs up and subscriptions. And let's go ahead and get into the video. So first thing I like to take a look at is last month's performance. Where were we at? So January, we ended between the Roth IRA and the individual account at $12,067.90. Our earned dividends between all of the portfolios was within the range of $37.82. I think I had included or discluded JP Morgan in that one, and I think this is just slightly off here. And our total return between both of the portfolios, the individual and the Roth IRA, I like to combine the equity of the returns, was up 5.99% for January 2019. Now, taking a look here, the individual account was at $446.25. Market gains of $7.24, earned dividends of $4.05, and our total return was at 5.37%. Now, where are we at here in January? Or February, I'm sorry. So we're now at $460.75. We have made some market gains of $21.74, up from $7.24. So that is about, what, $14 and some change. Our earned dividends has remained the same. I only own one stock here within the portfolio, and that is Vanguard S&P 500, ticker symbol VU. This is an exchange traded fund. So I mainly just kind of track and follow along on the index here, and makes it very easy. And this ETF only goes ex-dividend and pays on the 3, 6, 9, and 12 month. So that is March, June, September, and December. And next month in March is when I will go ex-dividend and then get paid out in that month. So the earned dividends will jump up. So as far as activity, again, we didn't make any sort of purchases. We didn't add any brand new equity into this portfolio. So equity wise, nothing really has gone on as far as dividends that were paid out or what stocks paid out dividends or reinvested into. I haven't added any new equity into here. So overall, it's mainly just sort of return. So we went from 446.25, so 446.25 to now $460.75. So this portfolio went up around 3.2%, 3.197, round up to 3.2. So it tracks there with the S&P 500. So around 3.2%, I believe, is what the S&P 500 performed here for the month of February, and what this portfolio has as a performance for the month. So that is the individual account. Not too much and exciting there. Now jumping over to the Roth IRA here, that is where we're going to be having most of our activity. We can see here that the value for this portfolio was sitting at $11,621.62. Our earned dividends was up $244.24. We had market gains of negative $178.31, and our total portfolio had just broke above positive here, showing 0.96% positive, and that was mainly just because of those dividends that have been paid out to the account in the Roth IRA. Now, if you haven't started your own Roth IRA, I highly suggest it. I do have a video covering the Roth IRA here on the M1 Finance platform. I will have a link here in the top corner. I also have a link as well as why I believe M1 Finance is the best broker for dividend growth investors, for investors overall, for just long-term generational wealth, because it allows you to buy stocks and ETFs for free. It doesn't matter how much or what stock the the price of the stock is, you're able to buy partial shares. So that's one of the benefits here, where you're able to just buy fractional shares. So here, for example, I added $10 into here, and Vanguard was trading at $229.30, but I was able to buy 0.0436 of a share. So well worth it. When you're able to just invest $10, $20 at a time, you're still able to invest in the companies that you want to be invested in, not get forced into buying specific stocks just because that's all your equity you could afford. So, and yeah, let's go ahead and jump over to the Roth IRA here. So Roth IRA, we are now sitting at $12,550.38 of equity. Our market gains is up $257.91. Our earned dividends is now $271.91, and our total return went to 7.36%. So overall, pretty good month here in the month of February. We can see here that our market gains went from negative 178.31 to now 257.91. That's a difference there of some 300, 400 bucks there. And our earned dividends went from 244.24 to now 271.91. Now, earned dividends and paid dividends are completely different. I will have a video if you guys want to check out the difference there. It's basically when you hold a stock through the X dividend, you have earned that dividend in the future, but it has not been paid out to you. And in the future, when you do get paid out a dividend, it'll show up here in your activity tab, and that is essentially the difference. But I do have a whole video if you guys want to check it out more in detail. Top corner, I'll have a link. And okay, so overall performance there. Let's go ahead and jump into the activity. What stocks paid out those dividends, and where was the new dividends and equity added back into? So starting back here on February 4th, we got paid out from General Mills $3.37, AT&T $8.85, JP Morgan $3.30. We also made our weekly deposit of $115.38. Very, minimal there, but it's working towards our plan of maxing out the Roth IRA. So this was an automated buy. I didn't manually buy this. This is just M1 Finance out there. It bought up Apple, ABM, Consolidated Edison, Kellogg's, Lockheed Martin, Lowe's, and Altria there. So it did a nice little selection there, $130.88 going into the market and working for me. Now the second week of February, I started to target stocks specifically. I started making my buy videos of what stocks I'm buying that week and why. So here, Lowe's paid out $1.81, ABM paid out $1.77. I made my $115.38 deposit. This week, I targeted Johnson & Johnson after their 10% fall. I believe that they were a better buying price here, so I bought Johnson & Johnson, Kellogg's, Lockheed Martin, Altria, and Walmart. So again, brand new equity as well as dividends getting rolled into the market. Now I made a video on Friday going over a buy and sell, why I was selling out of WP Carey, and it wasn't a complete sellout. All I was doing was selling out the capital gains that I had made from the specific stock. I was capturing those gains that I had made from the stock and rolling them with the dividends into Main Street Capital. I have a whole video if you guys want to check out more detail, that's on my channel, but I put $74.87 into Main Street Capital. And on the fourth week of February, we got paid out from AbbVie, $6.27 there. Very nice chunky there dividend. We also continue to increase and put in $115.38 there into the market. We bought Kellogg's, Lockheed Martin, Main Street Capital, Altria, and AT&T for a total buy into the market of $115.38. Now I had not planned on AbbVie paying me out, and I had specifically targeted stocks, so that is why I did not add those dividends in at that time. But I was able to roll those dividends here into the market. So I was able to roll my deposit of $115.38 as well as the dividends here from last week of AbbVie plus Caterpillar here of $281 for a total purchase of $124.46. And I purchased Avery Dennison, Kellogg's, Lockheed Martin, Altria, and Stanley Black & Decker. So those are the stocks, the dividends that paid out, what stocks paid out dividends, where I reinvested the dividends, as well as the new capital. I do have specific videos out every Monday of what stocks I'm planning to buy, what stocks I'm actually buying, and I post pictures over my Facebook page of how much I increase my dividends by, and so on. So that is the Roth IRA there. So individual account Roth IRA, pretty good performance there. We've almost hit about 13,000 of equity, so that's a little bit different here. We've got, we actually did put in quite a bit of capital into the market. Now, as far as funding here, we added $115.38 into the market here, so 115.38 times 4. We added $461.52 into the market of brand new equity. So if we wanted to take a look here at our overall performance, we could say that we're going to go ahead and add, let's go ahead and bust out a calculator here, paste that plus our $100, I'm sorry, not $100. What's our capital from individual? 460.76. So 460. Which one's my calculator here? Okay, we can just do this. 550.38 plus, oh, we already had that. 550.38 plus 460.76. And we added, what is this for? Yeah, we added $461.52 into the market. So this was our equity here without our new equity sort of going into the market. And then as far as last month's performance, or equity wise, we are at 12,000 there and 90. So percent difference there for the portfolio is up 3.91% for the month of February. So overall, pretty good performance there, and I kind of captured that down here. 3.91 is the total difference of the portfolio. So here, my base investment for the Roth IRA is now sitting a little bit above 12,000. Our earned dividends is at 271.91, as that's just here. I'm just kind of keeping track of this just because it's just a fun number to kind of keep track of. It's not actually how many dividends I've received or were paid for the month of February. We'll cover that here in just a minute. So my invested difference between where my original cost at, my current value, and my dividends, I believe, let's see here. I must roll that into there. I'm not going to trust that number right there. But my annual income here at 421. Let's go ahead and duplicate this and turn it into my February. I'm going to go ahead and lock this real quick. February 19th. And I'm going to go ahead and capture all this so it doesn't change on the next day. Okay, so performance-wise, we had a pretty good month. We can see here for the 1 month performance, our best performing stock here was Cardinal Health, up 8.63, Lowe's 8.16, Cisco, Stanley Black & Decker, and so on. We only had a couple of negative stocks here in the performance. If we take a look over here for the 1 month performance here, we can see that many of these stocks here, Altria 15.35%, it shows in here Cisco, Lowe's, Apple, and so on. This is only showing Kellogg's as being down 2.92%. So kind of interesting the way that M1 Finance kind of tracks the performance here, the gains and the return. I'm not sure, gains wise, I'm not even up $800, so I'm not sure how that, maybe for the month I went up $800. That kind of offset some of the loss there, and plus the gains. It's kind of weird and wacky here on the dashboard, but here is sort of where I'm tracking it all. And we did have a bunch of stocks increase in dividends. So here, Cisco increased their dividend from $1.32 to now $1.40. That's an increase of 5.88. Main Street Capital increased their dividend from $2.34 to now $2.40. That's an increase there of 2.53. Walmart increased their dividend from $2.08 to now $2.12. That's an increase of 1.9. Triple M from $5.44 to $5.76. That's an increase of 5.71. Essex Property Trust from $7.44 to $7.80. That's an increase there of $4.72. And finally, we had Simon Property Group going from $8 to now $8.20. That's a 2.47% increase. All these stocks here with an X were stocks that I bought into for the month of February. Now, as far as what stocks paid out dividends for the month, we had, again, General Mills paying out $3.37, AT&T $8.85, Lowe's $1.81, ABM $1.77, Apple $2.87, AbbVie $6.27, and Caterpillar of $2.81. Now, JP Morgan is not here. That is because while it does show here in the very first week here that JP Morgan paid out $3.30, on the actual statement, that is actually paid out. It actually paid out in January. It just stayed in cash. It didn't get rolled into the market until February here when I started doing my buy. So that is why I did not add JP Morgan here to the paid out dividends here in February. It's over here on the end of $3.30. So my actual dividends that I made from the Roth IRA was $38.01 here in January. So that's a little bit different than what this is showing. This is showing $37.82 versus this is showing $38.01. And the individual account, nothing really there. Base investment remained the same. I didn't add any new equity. I didn't make any dividends. So the actual performance again was up 3.2%. So if we're just kind of comparing our portfolios, the Roth IRA up 3.95, the individual account up 3.2%. These indexes, they haven't adjusted to the month for February. You can see here that year to date they're up about 11.08%. If you're looking at the 1 month performance here, it's not really kind of bumping over to the 1 month. Let's go ahead and switch it to the 1 day, now the 1 month. You can see here that includes January here towards the end, and this is showing 5.47. When I actually looked at the difference here, we can just look at the view of the performance here on this one. This one was up 3.2%. So that's probably what the performance was of the S&P 500. I believe the index has all sort of moved pretty well in the month of February. When I looked at my spreadsheet, see, 3.2% S&P, 3.6% Dow, 3.39 for the Nasdaq, and 4.95 for the Russell 2000, somewhere in that range. I have to look tomorrow when these come a little bit better and kind of better numbers, but that is basically it. All the stocks here, so I keep track of what stocks I buy every week. Here you can see what stocks went up, what stocks went down since I bought them. So just about every stock is positive since I bought it, besides Kellogg's, and it's actually, not too bad. Avery Dennison there down about 10 cents, and that is basically it for the video besides the dividends. Oh, okay, we can cover the dividends here real quick. So dividend increase between January and February. So we were sitting at $405.87 of dividends, and we are now sitting here in February going forward of $429.46. That's an increase in dividends of 5.65% for the month. So between January and February, I increased my income from dividends by 5.65% in just a month. I went from $405.87 to now $429.46. So kind of going forward, I'll make roughly, what, $30-some a month, almost $30 a month, and then maybe next month I'll make a little bit more. If we look at February's performance for 2018, we were at 2170. March's performance was a little bit higher at 3312. So we'll see how this sort of plays out. 3, 6. Let's see. This shows specific dividends that were paid out. 1684. Okay, so I may have not been tracking the dividends the best method there. So this is my method here of tracking dividends. It's a little bit cleaner. I like the way that I've kind of cleaned out my spreadsheet a little bit. Kind of keeps track of everything a little bit better. You can see the 1 month performance between all the stocks here. So WP Carey moving down slightly for the month, down 0.55. Kellogg's down 4.74, whereas Cardinal Health, Cisco, and so on. A lot of positive performance here within the market overall. So if you're a brand new investor jumping into the market here in January, February, just be cautious that the market does not do this all the time. This is actually bounced back very quickly as of the last month. I mean, year to date, we're up 11.08, 11.10, 13.52% here for the year. And that is a huge leap and bound. So total equity between both portfolios, $13,011.14. We subtract the new equity here of $461.52. that is now $12,549.62. And we take the difference here. So if we take $12,549 and we take last month's total here of $12,067, that'll give us our total difference for the month between both portfolios of 3.91%. So that is, should be right, February, 3.91%. So that is the actual performance for the month of February here within the M1 Finance platform. Between all the dividends and such and the equity that was built up for the portfolio, I took out the equity that I added, so it's not included there as far as the return. That's not included as far as returns. So 3.91% is the performance for the month. So that is it for this video. I didn't want to make it too long. I'm sorry if I did make it too long, you guys. And that is basically it. If you guys have any questions or anything, drop it in the comment section below. I always appreciate all your guys' feedback. I like having questions. If you guys have questions about my portfolio, if you guys have questions to drop in the comment section about stock market, personal finance, real estate, let me know what your performance was in February. I saw a lot of investors out there doing really well. Don't buy into the stocks that I'm holding just because I've bought them. Especially now, look at the performance over the month. So if you're buying into any of these stocks, I mean, they're already up some 5 to 8% here just within the month. So that is basically it. Give the video a thumbs up if you did enjoy it, and I will see you guys next time. Have a good day. Bye.